Woodburn Accountants and Advisors, we are here to help you solve your China business pain points. In today's episode, we are going to be looking at how to choose between a VAT small-scale taxpayer and a VAT general taxpayer. A little bit of complexities there. When setting up a Chinese entity, tax registration follows shortly after obtaining a business license. The regulation stipulates that taxpayers engaged in production or business operation shall, within 30 days from obtaining their business licenses, file written applications for tax registration with the competent tax authorities in the localities, so in the tax bureaus where the production or business operation is conducted, or ultimately where the tax obligation occurs. Now, there's a bit of a nuance with this regulation in terms of the 30 days because ultimately, the tax bureau also wants your bank account to be opened, and sometimes that bank account opening process can take more than 30 working days. So the tax registration should happen around 30 days together with the bank account opening. Now, as part of the incorporation process, companies must declare their taxpayer status at the very beginning of the company registration, choosing between a VAT small-scale taxpayer and a VAT general taxpayer. And this becomes the main question for many foreign companies unfamiliar with the Chinese tax system. The significant difference is as follows. General taxpayers can deduct their VAT on purchases from their VAT on sales at a specific rate, while small-scale taxpayers cannot deduct the VAT on purchases. So ultimately, you need to decide what is the scale of your business. And in order to optimize your VAT tax planning, is it better for you to remain as a small scale taxpayer, knowing that you can't deduct the VAT on purchases? Or is it better that you apply to become a general VAT taxpayer straight away, because then you have the ability to deduct the VAT on purchases against the VAT on sales? Another difference is that there is a reduced 3% VAT applied to small-scale taxpayers, which is applicable on the purchase and sale of goods and services, while general taxpayers are subject to higher VAT rates, and that depends on the goods, depends on the services, and it can vary between 13% or 9% or 6%. Watch our previous video and you'll be able to understand how those VAT rates might apply to you depending on the services and goods. The third difference is that in order to claim input VAT, which is the VAT on purchases, to claim credits on the VAT on purchases in China, the business must be registered as a general VAT taxpayer and obtain a particular VAT invoice. So with all of these nuances in relation to whether you should become a small-scale taxpayer or a general VAT taxpayer, foreign investors should decide based on the estimated business income while considering requirements from clients who might specifically request to have a particular VAT invoice depending on the VAT status. Keep in mind that general VAT taxpayers cannot be converted back into small-scale VAT taxpayers. When you register your company in China, you are automatically a small-scale taxpayer, and it's up to you whether you decide to upgrade yourself to a general VAT taxpayer. It's also important to note that once you hit an annual revenue of 5 million RMB, you will be asked by your tax officer to upgrade yourself automatically. You may also be requested sooner than that to upgrade yourself if you have a consecutive period of 3 months or more of high income levels between 300,000 and 500,000 RMB. So there are certain triggers that will push you to move from small scale to general VAT. Now, if you've got any questions in regards to whether you should be a small scale VAT taxpayer or a general VAT taxpayer, my biggest tip for you will be to create simulations on this based on what you estimate to be your revenue, your costs, etc. And we can help you do that. So we can help you apply for general VAT taxpayer status. We can also help you with the simulations, and we can also help you with your general tax advisory and tax filings. If you're interested to talk more about these specific pain points in China, click on the link in the comments section. You'll be able to choose a date and time in our diaries, and we can chat about what you're struggling with. If you enjoyed today's video, please press the like button. This helps us to get more viewers and subscribers to our YouTube channel. And last but not least, If you want to learn more about what we do at Woodburn Accountants and Advisors, head on over to our website, which is www.woodburnglobal.com. Look forward to seeing you soon. Take care and goodbye.